Nigerian government bond yields rose Wednesday but remain around 15% across maturities. Well, joining me to discuss the outlook for bond yields is Kubi Momoh. She's the Chief Risk Officer at Keystone Bank. Thank you so much, Kubi. Pleasure to have you. But I would like us to start with the Naira, actually. We've seen it swinging between gains and losses against the US dollar. But I think on Tuesday there were dollar supplies from oil companies. But now the Naira dropped yesterday again. I mean, has all that liquidity dried up so quickly?
No, the issue is because of the recent restrictions by the central bank, we have 41 items that cannot access the official market. Yeah. So what we're seeing, in fact, yesterday is the greatest spread between the official rate and the parallel market rate this century, because we've gone back to look at the records from the late 1990s. So it's significant. And that's because a lot of things cannot access the official market. So if you can, and you can get those rates, that's fine, because at least there's some level of stability, maybe for the manufacturers and for some essential areas, oil, at least the oil marketers can get foreign exchange at the central bank rate, and that should help in that sector. But for the rest of for a lot of other goods, there's simply no way to obtain foreign exchange anymore.
Now, we've seen a bearish trading at the bond markets so far this week. Traders are saying that investors are worried about this new Iran deal. We know that Iran is now going to be pumping oil into an already oversupplied
and then you saw oil prices reacted immediately.
Yes,
we saw NYMEX at $51. Yeah. And what that means is that for Nigeria, it means that what we needed, I think I'd said before that one of the best things that can happen to us is for oil prices to pick up, because that helps a whole lot of parameters down the curve for us. And if that doesn't happen, if we're seeing oil prices, I mean, I saw a lot of analyst predictions, and they're seeing oil in the 40s, and that is not where we want oil
because
to
of
be.
Iran?
Yes,
as
partly.
An added pressure.
Yes, as an added pressure. I mean, it will take a while, a little bit of time for them to come on stream and for them to also start supplying. But I mean, a while, not that long, really. So that's going to have an impact. And we see oil prices staying sub 50.
Putting pressure, obviously that will put pressure on government revenues. What about, I mean, there's also concern that the Fed, we could see an increase in FGN bond issuances, especially now that the government is doing that in exchange for commercial loans to cash-strapped states.
To the states.
How big a concern is that for the market?
Well, it depends on what the full volumes are, because for a while now, the government, the DMO and the federal government, central bank, have been validating how much exactly do states owe. So they're going to be working on those numbers and getting the final figures. And when that happens, yes, they will be issuing more bonds. However, it won't be creating new debt specifically, but it will be improving the status of those loans, because you're no longer indebted to a state, you don't have a commercial loan with the state, you now have an FGN bond which could trade depending on which maturity they issue for it. At least it will trade, it will put liquidity in the banking sector. But yes, it will increase. It will change the shape of government borrowing, less state and more federal.
I mean, that sounds like good news. So, I mean, why
it is
the
pretty
concern?
good news.
Is it that investors are not clear what the outcome will be or how it's going to be structured, or is it just a clarity issue?
Well, maybe there's a moral hazard issue that, okay, have the states got out, but I don't think so. I think it's more of a practical step, because it's something that had to be done. You cannot leave the states to not be able to pay their current bills. But what it has done is to maybe kick the can down the road a little bit. They're going to be paying for a much longer period. They're going to have a direct charge from the federal government, and maybe there will be some I don't know what will happen in the very, very long term. But for the short term, we needed this easing. It just had to happen.
Absolutely. Now, there was a bond auction yesterday by the DMO for
44 billion went out, yes.
Oh, out of, and then there was they were going to offer 70 billion.
2020. Yeah, I don't think they didn't fully sell, because 44 billion went out. The 2020 and the 2034 maturities, 15.29 and 15.3%. So those are attractive yields, but we're not getting the kind of interest from foreign investors, because there's nervousness that if I come into Nigeria, will I be able to take out my money, my investment when I'm ready to leave?
Interesting, because I was going to ask you, has there been an equal pullback from both domestic and foreign investors? So obviously foreign investors are more nervous.
Foreign investors will remain nervous, because they're watching what's going to happen. Is there going to be a currency correction? And if they can't see a fundamental, one of the fundamentals, oil price, or should I say one of the drivers, so if that driver isn't looking positive, then they're going to be watchful and wary that is something we want to do with the 15.29% compensators in case there's a move on the currency.
I talk talking about being watchful, the MPCs next week, we hear it might be moved to, or has
Thursday
been moved
or Friday.
to Thursday or Friday.
Yes.
I mean, obviously, that's one key event that the investors, foreign investors, will be watching. Are you expecting the CBN to make a move, especially now that inflation is heading to double digits?
Well, the central bank governor has been very consistent right up to yesterday in saying that they are not going to devalue the currency. And that's interesting because everybody else, a lot of other analysts are looking and saying it is unavoidable. Like I said, we're seeing the biggest disparity this century. Well, I mean, we haven't done too many years, but it's the biggest disparity.
Isn't the CBN worried about how the Naira is, I mean, the performance of the Naira at the parallel market?
Well, maybe they should use, they might not have a war chest, but at least a little battle chest, a little bit of it. Should we de-restrict one or two of the things we've restricted? Because it's the level of restriction that has caused that huge gap, because there just isn't enough supply for all the items that cannot access the official market. So they may want to tweak a little bit. We have reserves. Reserves went up from 29 to 31 billion. So maybe there's a little 2 billion or 3 billion to maybe ease a little bit, some little bit of easing, calm the market, and then from there on continue with the general.
That's the headline rate?
No, in terms of easing the supply. If you ease supply a little bit, then you can get control of price, because right now, maybe a little bit of panic, maybe a little bit of a worry.
Yeah, do you think that perhaps, I mean, just to calm things down a bit, CBN
yes,
could reduce the headline, the MPR itself?
The rate.
They touched the MPR itself, bringing it down from 13 to perhaps back to where it was before, 12%.
Yeah, but then they're trying to do exchange control, so exchange and price at the same time. It's a tricky one. It's a tricky one. Might need some creative ideas to come out of this MPC meeting
on Friday. Yes, so you see an interesting one.
I think it will be an interesting one. Yes, and then you look at inflation again. Inflation is up, so there are a whole lot of things that need to. That need to be managed.
Interesting. We'll definitely keep an eye on this one and see how it plays out next week. Thank you so much, Kubi. Pleasure having you on the show. That was Kubi Momoh, Chief Risk Officer at Keystone Bank.